Hello, everybody, and thanks for joining us today on Credit Suite's live stream. Today, we are going to discuss why and how to use an LLC. It's good for some businesses, and it's a bad choice for others. My name is Steve Weibel. I'm a senior sales rep here at Credit Suite, sometimes part-time host when Ty is taking some well-deserved time off. Thanks for letting me join you today. I'm really excited. Let's dive right in, okay? Oh, keep in mind, my team is here to answer any and all questions down in the comment section. Feel free to reach out. Don't be shy. We love to hear from you. And by the way, reach out to us at 877-600-2487. Have yourself a free business credit consultation where my team can help you to begin building your business credit. All right, so let's talk about setting up a business. Look, one piece of setting up a business, beyond deciding on the name or buying web hosting or all the ancillary things that you think about when you start up a business, is deciding on the actual entity, the type of business you're going to have. The business entity you choose will directly affect your business in numerous ways, right? So let me tell you why they matter. Your business entity will determine the following with reference to your business: taxes, your legal liability, this we're going to dive into heavily today, your costs and shares. So there's some of the others going to cover. So let's talk about LLCs. LLC actually stands for a limited liability company. According to nolo.com, an LLC is one type of legal entity that can be formed to own and operate a business. Please bear with me. Difficulties there. I lost power. So anyway, we're back. An LLC is one type of legal entity that can be formed to own or operate a business. LLCs are very popular because they provide the same limited liability as a corporation, but are easier and certainly much more inexpensive to form and run. But there's some things you need to know. It's a popular business structure combining both the liability protection of a corporation and pass-through taxation of a partnership. So that's really key. Right? One advantage of an LLC is the flexibility it offers in terms of management and ownership structure. So let's talk about LLCs versus corporations versus partnerships. In order to best review what an LLC is and how it can be helpful to your business, it pays to explain what a partnership and corporations are. Right? So including where they converge and where they differ from LLCs. We'll also look at sole proprietorships because I talked to a lot of people that have sole props and they always wonder, how's that directly affecting them? All right, so first we got to start with the IRS. The IRS recognizes these business entities and these alone. This is going to shock some people, right? They recognize sole proprietorship, they recognize a partnership, and they recognize a C corporation. So that's it. It's all the IRS recognizes. They recognize 3 entities and that alone: sole proprietorship, a partnership, a C corporation. I know some of you are going, whoa, whoa, whoa. I have an LLC, I have an S corp. According to the IRS, this is the 3 entities that they actually recognize. An LLC is not considered a separate entity by the IRS, right, from a tax point of view. As a result, the IRS will follow certain rules depending on the size of an LLC when it comes to deciding whether to treat it more like a partnership or more like a corporation. So there are certain rules that LLCs, that the IRS will follow when it comes to your LLC to decide how to treat you from a taxable point of view. They can even treat you as a sole proprietor. Okay, so you have to understand that when thinking about becoming an LLC. Business entity definition: sole proprietor and partnership. Sole proprietors, per the SBA, this type of structure can be a good choice for low-risk businesses and owners who want to test their business idea before forming a more formal business. So if you're just starting out your business and you're creating widgets, or you're really good at XYZ, and it's kind of a hobby, and you're like, you know what, maybe I can take this to the next level, and you want to start a business, a sole prop is a great idea. Just to test it out, see if it works, right? Partnerships, there are limited partnerships and limited liability partnerships. So you've seen it sometimes. You'll see X, Y, and Z LP or X, Y, and Z LLP. That's the difference, a limited partnership versus a limited liability partnership. Limited partnerships have only one general partner with unlimited liability. All the partners have limited liability. That's in a limited partnership. All right. With limited partnerships, partners with limited liability also tend to have limited control. over the company. So you may have a minority partner. We start a limited partnership, and let's say I'm the general, the manager, the general partner. I can have minor partners who have no real say in how the business goes. They may have some equity and or some financial investment, but they're not really running the company. The general partner, the partner without the limited liability, must pay self-employment taxes. Okay, limited liability partnerships work a lot like limited partnerships, but they give limited liability to every owner. Okay, there's a difference between a limited partnership and a limited liability partnerships. An LLP protects each partner from debts against the partnership. Right? Plus, partners will not be responsible for the actions of other partners. So I see a lot of law firms. I'm not saying that's the best choice, but I see a lot of law firms that are set up as LLPs, and actually doctors' offices as well I'll see set up as LLPs. So what's a C corporation? C corporations have a completely independent life separate from their shareholders. If a shareholder leaves the company or sells his or her shares, the C corporation can continue doing business relatively undisturbed. The corporations have an advantage when it comes to raising capital as well. As a C corporation, you can actually sell shares of your stock, right? So you can raise funds through the sale of stock. We hear it all the time. So-and-so company went public. They are a C corporation. That's how they raise money. They can also benefit in attracting employees. C corporations could be a good choice for a medium or higher risk business. They'd be good for businesses that need to raise money as well. So I had a company, I started off as an LLC, went to an S corporation, and then finally to a C corporation as the company got larger and larger. They're good for businesses that need to raise money. If you're looking to raise money, C corporation might be the way to go. And they can be good for businesses that plan to go public or eventually be sold. Right? Incorporating, whether a C or an S, is also how to truly build business credit that's separate from personal. I'm not saying you can't separate your liability with an LLC, but this is the one way that it's 100% completely separate. A C Corp and an S Corp is completely separate from the ownership. S corporation is also called subchapter S corporations. An S corporation is a special type of corporation. It's designed to avoid the double taxation drawback of a regular C corp. And that's the thing, when we talk about C corps, you need to talk to your accountant because there are taxation issues that you'll have to deal with. An S corp allows profits and some losses to actually be passed through directly to the owner's personal income. So if the company makes $100,000 and there's 5 partners in this S corporation, 5 shareholders, all equal shareholders, the profits will pass through to the owner's tax liability, to their direct personal income, without ever being subject to a corporate tax rate. Okay, S corporations are subject to certain rules, such as they can only have 100 or fewer shareholders. So an S corporation is a really good choice if you're a small company. You truly want to separate yourself from the company. You want to not just limit, but eliminate your liability. An S corporation may be a perfect choice for you. Now, let's talk about sole proprietorship. There literally are no limits to personal liability. As far as the world is concerned, the sole proprietor is you. You are the sole proprietorship, all right? You are one and the same. As a result, if the sole proprietorship did it, then so did its owner. In other words, so you are 100% responsible for the sole proprietorship if you are an owner of a sole proprietorship, all right? This includes all debts, obligations, and any risk from the actions of employees, lawsuits, things like that. All right, so you have to keep that in mind. That's why sole proprietorships are great for startups. You want to test the market, but once you feel like this is something that will really grow, it's a really good idea considering switching to a different entity that makes a little more sense from a liability point of view. So let's talk about legal liability on partnerships. In partnership situations, partners retain full shared liability. Right? If it's just a straight partnership, not an LP or an LLP, just a straight partnership. Therefore, partners are not only liable for their own actions, they are also liable for any business debts and decisions made by any other partner. So keep that in mind when you think about becoming a partner with someone. If you set it up strictly as a partnership, you and they are 100% liable for any and all actions of each other, and also any other debts as well. All right. In addition, all the partner's personal assets can be seized to satisfy a partnership's debt, which is a little scary, right? Limited liability partnerships are an effort to address some of these downsides, right? So like limiting a partner's liability to just the money, so he or she put into the business. So that's when setting up an LLP, they're trying to limit to just your investment being at risk, all right? Now, let's talk about legal liability with C corporations. Within a C corporation, shareholders' personal assets are completely protected. No different than you going out and buying stock in Amazon or in, Microsoft, or I was going to say AOL. That tells you how old I am. Not that you can't, but you get my point. So if you happen to buy shares in one of those companies, you're not personally liable for anything that company does. You're just a shareholder. Your personal assets are completely protected. Shareholders can usually just be held accountable for their actual investment in the stock of the company, right? But if an employee commits fraud or felony under the corporation's direction, then the corporate veil can be completely pierced. So in other words, if the vice president of a corporation commits fraud or any type of felony using that company under the corporation's directive, then they can pierce that corporate veil and hold everyone personally responsible. If this happens, then personal assets can actually be on the line. All right. Some additional legal liability for S corporations and LLCs. An S corporation shareholders' personal assets, like personal bank accounts, cannot be seized for the purpose of satisfying any business liabilities. That's with an S corporation. Owners of an LLC are actually called members. They're not called owners, shareholders. They're called members. They're members of the LLC, as opposed to the owners of corporations, which are called shareholders. In an LLC, the LLC members are protected from personal liability for the business decisions or actions of the LLC. If the LLC incurs debt or is sued, the members' personal assets are often exempt. We underline often for a reason. There are going to be some cases where that can be pierced. That veil can be pierced. It's not always. You're not always going to be protected. Hence the term limited liability, right? Limited liability, LLC. All right. So let's talk about the costs and shares between a sole proprietorship, partnerships, and LLCs. In a sole prop, the owner is the company, which we touched on. You, as the owner of that sole prop, are one and the same, right? Everyone's going to look at you and that company as one and the same. If it makes money, so does the owner, and their shares 100%, right? In partnership situations, partner shares vary, and they should be clearly spelled out in a partnership agreement. So when you talk to someone, they say, hey, I'd love to be partners, you have to be really clear about what you're laying out. Everyone always wants to assume 50-50, but maybe you're putting up 50%, and two other people are putting up 25%, right? So an LLC works as another type of corporation. The only real difference is liability rather than shares and costs. So it works like other corporations. So again, the only real difference is liability rather than shares and costs. All right. A corporation is run by its board of directors. These are usually the owners, by the way, but not always. Ownership stakes are defined by what percentage of stock everyone owns. So we're talking about a corporation here. If one person has a controlling interest over 50% of the stock, then their decisions will generally overrule everyone else's. If the shareholders have smaller stakes in the corporation, sometimes shareholders will band together to influence decisions or even kick out board members, right? You've heard this proxy votes. You guys have all seen enough movies where you see this is involved, where the shareholders gather together to eliminate the board of directors. Profits are generally distributed on a per share percentage, right? Sometimes you hear them called dividends, but board members can actually take a salary. Right. In an S corporation, a shareholder working for the company must pay him or herself reasonable compensation. Life experience. I had an S corporation. We were doing fairly well. It was early in the process, maybe year 1 or 2. I think it was year 2. And our accountant came to us and said, look, you need to be paid a reasonable compensation. You're not taking a salary right now. And of course, we felt like we should be pouring everything into the company. They said, you're making too much. You need to take a salary at this point. So we basically wrote ourselves a check, paid the taxes, and then wrote it right back to the company. Because the IRS says if the company is doing X, the owners need to take a reasonable compensation, right? The shareholder has to get fair market value. Otherwise, the IRS may reclassify any additional corporate earnings as actual wages, right? So that's what I think of my accountant was trying to tell me. Hey, if you don't take a salary here, they're going to take all these profits, which are taxed at a different rate, and make them personal income. And that's significantly higher, significantly higher. So you want to be careful. All right. Sole proprietors are the same as their owners. Like we said, the owner pays taxes on the sole proprietor's profits. Partnerships do not have to pay income tax. Instead, the business will pass through its profits or losses straight to the partners. Okay. So with a sole prop, any profit you make, you're personally paying taxes on it, right? As a partnership, the company doesn't pay any taxes. Everything passes through to the partners. right? Then the partners will include their respective share of the partnership's income or loss on their own personal tax returns. So you and I are partners 50-50. We make $500,000 this year profit as a partnership. You get $250,000, I get $250,000. We file that on our personal tax returns. Make sense? Great. Let's move on. C corporations. C corporations pay state and federal tax. Remember, they're recognized as separate entities by the IRS, right? So they're going to pay their own state and federal taxes if there are state taxes. They sometimes also pay local taxes if maybe you work or have a business in Philadelphia, right? They know they have a local tax. This will include paying income taxes on profits. It is the opposite of partnerships and sole proprietorships. The exact opposite. It doesn't pass through. All right. A corporation can end up paying taxes literally twice, right? First when it makes a profit, and the second time when dividends go out to the shareholders, right? So the company pays taxes, what's left goes out to you as a shareholder, and you could end up paying taxes on that as well. So you want to be really careful. This is the case even if there's just one shareholder, right? I'm going to leave that up for a second just so that really sinks in. With a C corporation, you can end up paying taxes twice. It's really, really important when you're deciding what type of entity you have, or if you're going to change entities, that you talk to your accountant, talk to your attorney, make sure it makes good sense for you. All right. On S corporations, only the wages of any S corporation shareholder who is also an employee are subject to an employment tax. So if you were a shareholder in S corporation but did not work there, you're not going to pay employment tax on the income or the dividends that get passed through to you. All right, that get distributed to you, not passed through. Any remaining income is payment to the owner as a distribution, right? Call it we call it just distribution. Distributions are taxed at a much lower rate, if at all, depending on investment, any loss carryovers, etc. Per the IRS, generally, an S corporation is exempt from federal income tax other than tax on certain capital gains and passive income. It is treated the same way as a partnership in that generally taxes are not paid at the corporate level. All right. So an LLC is not a separate entity as per the Internal Revenue. We touched on that at the very beginning. It's not a separate entity. As a result, it is not taxed directly. Instead, the members pay individual taxes. Members of the LLC have to pay an employment tax on the entire net income of their business. An employment tax would be the matching the Social Security, basically, right? So it's taxed at, I think, 7%, and then the employer matches it, or 7.5%, and then the employer matches it. You would have to cover both ends of that. That gets a lot of people in trouble. You want to be prepared for that. If you're someone who's on payroll and used to seeing X percent coming out for Social Security, you got to understand, as an employer, even if it's yourself, you're matching that tax. You're literally paying double, okay? But there are some upsides. LLC members are protected from personal liability for the LLC's business decisions or actions. If the LLC incurs debt or is sued, member personal assets are often exempt. LLCs don't pay the double taxation of a standard corporation. And if they pass through profits to members on member tax returns, LLC owners may be able to deduct 20% of their business income with the 20% pass-through deduction established under the Tax Cuts and Jobs Act of 2017. I know that's a lot. Again, if you have any questions, my team's there in the chat box. They're happy to answer any questions. And if you want a free consultation, you can certainly reach out to us at 877-600-2487. We have a whole team standing by ready to take your phone calls. Now let's talk about the downsides. For downsides, I need to take a sip of water. An LLC is not actually considered a separate entity, right? Hence, it's not good for fully separating business from personal credit. I want to stop here because we talk about this all the time, building business credit and how you're going to separate from your personal. When we say that, you can certainly do that as an LLC. You can get business credit, but it's not good for fully separating business from personal credit. I know that's a little bit of a gray area. LLC members end up paying employment taxes on their entire net income of the business, all right? So as an LLC member, you're going to pay employment taxes on the entire net income of the business. LLCs can't issue shares, so they can't use the issuance of shares as a form of fundraising, right? Annual biannual renewal fees are often higher than for corporations, all right? And actually, it varies from state to state. Setup fees as of 2021 run from $40 in Kentucky to $500 in Massachusetts, and everything in between. The annual or biannual renewal fees, or we call annual reports here in Florida, run from $0 in Arizona, Idaho, Minnesota, Missouri, New Mexico, Ohio, South Carolina, and Texas, to as high as, get this, $800 in California annually, plus $20 every other year, right? So you really have to understand what your state fees are. It's usually pretty easy to find. You go to your Secretary of State and you can look that up. If you're not sure how to do that, once again, reach out to us at 877-600-2487. All right. So to recap, is an LLC right for your business? If you want to build credit for your business, an LLC will not offer you the protection that a C Corp or an S Corp does. Doesn't mean you can't do it. But an LLC is way better than a partnership or sole proprietor. Partnership, sole proprietor, that credit is going to you. That's basic. I look at that as personal credit. At least with an LLC, there is some separation. All right, well, especially when it comes to personal liability. All right. If you want to potentially save on taxes, then an LLC might be a great idea for you. And I actually believe it's a great idea for most small businesses, right? Up until a certain amount of revenue and or profit. And again, that's a conversation for you and your accountant, you and your tax attorney, or just your attorney. But if your business truly takes off, your personal taxes are going to be significantly higher as an LLC if it truly takes off, even with the 20% reduction. If you want more information, please reach out to us again, 877-600-2487. We'd love to talk to you about building your business credit, showing you how to truly separate from your personal debt or your personal credit. Again, 877-600-2487. My whole team is waiting for you to give us a call. Next time, you got to be here for this one. We're going to cover, is credit card stacking a scam? Is credit card stacking a scam? You got to be here tomorrow. You're going to love it. I can't wait. I actually get to be a guest host again tomorrow. I promise I won't have my dog in the room this time. So everything will be good. All right, we'll see you tomorrow. Thanks so much. This has been Steve Weibel. Why and how to use an LLC. It's good for some businesses and bad for others. Again, 877-600-2487. Reach out. Set up a consultation with us. We'd love to help you. Thanks again. We'll talk to you soon.